Hey, it's Ryan from the Dividend Investors Club, and we had a tough week last week in the market. And so what I wanted to do is put this market correction survival guide together for you, because these can be profit-making opportunities. And here's just some simple steps that you can follow so that you too can profit from a stock market correction. Just first and foremost, number one, during a market correction, you got to stay calm. Okay, you cannot freak out and sell all of your stocks. This is not going to be a recessionary, market crash like I think some people are thinking. I think quite the contrary. We got some actually very good news last week, and obviously corporate earnings have been fantastic. So this pullback we're seeing here, and we just pull up a quick little chart of the S&P 500. This pullback is one of those kind of healthy pullbacks, that people talk about. It's hard to see it while it's happening. It's hard not to freak out a little bit, but this is definitely not the situation where you want to run out and just sell your stocks because you believe that, there's a major crash coming. I really don't feel like that's the case. I think this is, the market had just gotten ahead of itself. We've been talking, in our market trend trackers, just the trajectory of this move that the S&P 500 has made recently. You can see that right here in the chart. I mean, it's just, gotten more parabolic. We've been looking for, some kind of test of the 50-day moving average, which is this blue line here. You've got your 200-day moving average, even a little bit lower than that. As long as the market keeps trending up along those trend lines, we're still in a bull market. We're still in this upward trend. So it's nothing to worry about, longer term. And I think what you'll see here is, this 50-day moving average right around 27.15 is right around a 5% pullback, and we haven't had a 5% pullback, in over a year. I think it's been over 400 trading days, since we had a 5% pullback. So it was bound to happen. It's hard to see it now, especially with a day like we had, last Friday. But I do think in recent times, just the last couple years, market corrections have happened very quickly. So I would actually look for, this market correction to maybe bottom out sometime next week. But there is probably a little bit more downside, and it's just, simply looking at little things like this. The 50-day moving average is, right around, 5% pullback. 2600 area here is about a 10% pullback. So I would say it would be somewhere in between there, but I wouldn't be surprised if you got, some dip buyers coming in, right around that, 5% pullback level. And then we kind of, not necessarily head higher and make new highs, but at least kind of stabilize. And you can kind of catch your breath and kind of figure out, kind of what you want to do from there. But, again, number one on this survival guide is to stay calm, because you don't want to freak out and sell all your stocks. So number two, selectively raise cash, right? If we're going to get, a 5 to 10% pullback, there's definitely going to be some bargains out there. So you're going to need a little cash to shop with. And I'm not talking about raising 50% cash or anything like that. If you've got 10 to 20% cash, I think that's kind of a great, level of dry powder to be able to go out and buy some stocks. And, what do I mean by, selectively raise cash? Go out and buy, I'm just going to pull up something like Boeing, stock that I know has run up significantly. Go out and sell, a piece of your positions. You don't necessarily have to sell, all of these position or your whole position size in certain stocks, but, maybe take 25%, 50% off the table on these stocks that have run up significantly, right? And you can use, obviously we have these action ratings. I would take a look, and this is what I do for my own portfolio. Like I'm looking at stocks that have, a profit rating on it, or, a low, value rating, high momentum. Those are stocks that are obviously probably overbought, from a valuation perspective. Can they continue to go up as much as they have been? These are ones that I'm taking, selectively taking profits on, right? It's really about just that long-term strategy of having an exit strategy for certain stocks. Because, what you want to do in a long-term dividend portfolio is you want to keep your capital base stable. So, one way to do that is to sell stocks that you have a slight profit in, or not slight profit, but ones that you've profited significantly on. Take some of those chips off the table, reinvest those back into stocks that are trading at a better risk reward, kind of a higher value, situation. So it's really just, taking stocks, taking money from stocks that are maybe overbought, and then investing those in stocks that have a little bit more value to them. So that's certainly one way to do it. If we look at number 3 on the list, consider hedging strategies. It's not too late, right? I mean, we're only down 3 or 4% on the indices, and if we get even a 7, 8, 9, 10% pullback here, there's still time to consider hedging strategies. One strategy that we like are protective puts. We like protective puts because it's one of those strategies where you can buy insurance essentially by buying a put on, say, the S&P 500. You can do it through the ETFs, the SPY, but that's one strategy that your cost is limited to what you pay for the put. You can also do like a bearish ETF. You could buy a bearish ETF, which kind of moves inversely to the market, so it increases in value as the stock market goes down. The problem with those, if the market turns around and goes up 20% from here, and you're stuck holding that one, you're gonna significantly eat into the upside, because now you're losing money every day that market goes up with one of those bearish ETFs. So that's why I like a protective put. You can do protective spread, put spread, so you're kind of reducing that cost by selling further out of the money put. And that's more of a conversation for a different video, and I'll get another video out there specifically discussing these hedging strategies. But it is not too late to put a strategy like that in place, because the VIX is still right around that 15, 16, 17 area, and so there's definitely room for the VIX to increase. So it's still not a bad time to buy a protective put using the S&P 500. Fourth, build a watch list of stocks that you want to own. I mean, this should be just a part of your long-term strategy anyway, but this is a perfect time to do it during a market correction. What we use to kind of do our own watch list. You can see, on the website here, we've got screeners. These are all default screeners that you guys have access to as subscribers. And so, we've got a couple in here. We've got stocks in the buy zone. So those are stocks that are currently in the buy zone. But one, I like to look at is the buy zone watch list. So this is a, a list of stocks that are within 10% of their buy zone. And so these are stocks that aren't quite yet down to the level that we want to buy, but it's certainly a great watch list of stocks to consider. And so that's definitely a starting place that I use. You can build your own watch list. In your brokerage platform. You can build just ticker your watch list of certain stocks you want to follow. Have buy zones established, and that's actually number 5 on our list here is establish buy zones for each of those watch list stocks. So those kind of go hand in hand. Making sure you've got a list of stocks you want to own, and then establish a buy zone for those watch list stocks, because again, this is a time for you to be able to profit. These are very good times for long-term investors. It kind of resets the level of the S&P 500. You're able to go in there and you're able to find decent value stocks, and those are great times to put money to work in a long-term portfolio. So again, I can't stress that enough. This should definitely be part of your long-term strategy anyway, but always have a watch list of stocks that you want to own, because if you've got more money to put to work over time, you're making new investments, you always want to make sure you're investing in good risk reward situations, and those are stocks that are obviously trading in a buy zone, which is kind of a good relative value zone for those stocks. Again, you can do that on the website. Just for example, this is the watch list. So if you click on, let's see, CVS, for example, that's a stock that's, very high on the dividend side. Safety is very high, value's high. I'm looking at these rankings right here. and then you can see, it's trading very close to the buy zone. So this is one that, further weakness next week, I'll be taking a look at that to say, wow, this stock's in the buy zone now. This is a good opportunity to put the, new money to work there. And so keep your eye on these buy zones. Keep your eye on just watch lists of stocks that you want to own. And this is how you profit from a pullback or a correction. And, again, just to reiterate, I do not believe this is going to be a big major crash. I think the economy is very strong. And, this was bound to happen at some point, but I think this is just a very healthy pullback. And I think, we'll probably get somewhere in the 5 to 10% range. And I would probably be looking for it to happen pretty quickly. So next week, definitely keep your eye on those levels. Keep your eye on your watch list of stocks, and definitely stay calm. That's all I have for this video. Take care out there. Be safe and stay calm. I think we all know that the stock market can be a scary place, especially if you're trying to go at it alone. But you don't have to do it. You don't have to be there alone. At the Dividend Investors Club, it's a community of investors. We're working together to grow and preserve our wealth. So if you like this video, please check us out at dividendinvestorsclub.com. Consider joining the club and joining us, and definitely subscribe to our YouTube channel by clicking the subscribe button below this video. Take care.